All right, on that note, welcome everybody. This is Mark Fidelman from Smart Blocks. Joining us today is James Shee. He is one of the founders of our first tokenized real estate fund on the platform. They are tokenizing properties in San Diego County, which is still on fire, believe it or not. But better yet, they've got a whole proprietary system where they buy real estate in San Diego, put ADUs on it for 200 to 400 $200 to $400 a square foot, and then resell it somewhere between $800 and $1,200 a square foot, almost locking in profits for you that would be investing in. The best part is they can, as long as they follow the rules, they can't be stopped. There's not a lot of regulatory risk because believe this is a state law, it might be a county law, that you can't stop this from happening because of our housing shortage in San Diego County. So with that, let me introduce you to James Shee and let him take it from here.
Hey, thank you so much, Mark. Happy Wednesday, everybody. I don't know where you guys are coming in from, but appreciate you guys taking the time and being out here. Today's a part two, so in our original one, we kind of went over like the basics of everything that we were doing. This one is going to be a bit more targeted to actually how we accrue those 50% returns for people. So for everyone here as well, just disclaimer, Mark, I don't know if you want to run through this really quick as well,
Yeah,
but this
I
is the
let me
securities.
yeah, definitely let me run through this. So, all right, if you're in the US, okay, you have to be an accredited investor. Don't ask me why. This is the current policy. We'll look for regulations to be changed in the next 6 months. I mean, the current administration has signaled they're going to change it, make it much more onerous, or much more easy, not onerous. It's onerous now. And so if you are investing via the platform, even if it's $100, you have to be an accredited investor. Believe it or not, you could buy a Porsche and walk off a lot without with a Porsche and not be accredited, even though that might be an investment to you. But to spend $100 on a real estate project, a fraction of a real estate fund, you need to be accredited. That's only in the U.S. Outside the U.S., I know we have a lot of international people that are on here. You don't have to be accredited, but everyone needs to follow what's called a KYC, which is Know Your Customer, and AML, which is anti-money laundering. Once you pass that, then you can invest to your heart's content. We do encourage you, if you're looking to invest more than $25,000, there'll be some contact information at the end to contact James directly, and he and his team can handle you and answer any of your questions you might have left over. There is also a previous webinar where we talked a lot about the opportunity. This one, like James said, is part two. So if you're listening to this as a recording, go watch part one as well. We'll cover some of part one here because it's important that you understand what it is that the offer. It's an incredible offer, in my opinion. So James, I think we've covered the disclosure. Let's continue.
So just giving you guys a bit of a glance about what we're actually going to go over today. I'll give a quick background for the people that didn't actually speak with me in the first part. But I am an attorney. I primarily deal with EB5 investment. And so we deal a lot with real estate around the United States, investments into it. All the clients that we work with are essentially millionaires. And that's kind of why this is such a great opportunity for this too. We've thought about turning this into an EB5 project down the road, but at the current time, it's really just going to be something simple, straightforward, and in San Diego County, where we can just get some investments into here and build some great ADUs for people. The first question a lot of people might have is just like, why San Diego? For any of you that have not really reviewed it, California is in a housing crisis. Uh, we're going to go a bit more in depth into a lot of what we were talking about in the first part too. Um, so California basically has hundreds of thousands of units. People are moving out not necessarily because they want to, but because just the housing shortage here makes it almost unaffordable for people to live here. That's really, really prevalent in San Diego, where San Diego is pretty much one of the highest and most expensive places to live in. And it's primarily due to housing shortages. So average, one bedroom here is probably around $2,000 to $3,000 just for a one bedroom unit. So what California ended up doing was enacting a whole bunch of laws. And then San Diego basically said, well, we are so far behind in our housing that we're just going to actually approve a lot of the ADU laws. So they basically did a whole bunch of ones that I like to focus on. And what really made this attractive to us as an architect developer was first, if you're building within a public transport area, which means, a trolley, a bus, or something like that, they actually remove the parking requirements. So you can literally build 20 units, have zero parking, because everybody's assumed to use the actual public transportation to get around. That's huge, right? Because parking takes up a lot of space, and we don't have a ton of space in desirable to live areas here in San Diego. The second thing is the time frame, and I really harp upon this a lot because by 2029 we have to hit a certain housing requirement, and if that's not hit, basically San Diego gets penalized for that. So what we're trying to do is be part of that solution to help hit that housing requirement. It's about 200,000 units, and I think they're about 100,000 right now behind. Uh, the other part here is that everything for ADUs are, as Mark was kind of alluding to in the past, they are actually no way to actually stop them. So previously, prior to all these laws by the state, you could say, I want to build an ADU in my backyard, provided you have the space. And a HOA or a area could say, well, we actually don't allow ADUs in our area. Instead, California said that is no longer permissible. If somebody wants to build an ADU, you cannot stop them from actually building that ADU in your neighborhood. And that actually has caused a lot of conflict with some really, really big communities because they're like, well, we never allowed ADUs in our area. But it also means that it opens up a lot of areas where previously you could not build ADUs and that are highly desirable to live. You can now build as many as you, well, not necessarily as many as you want, but you could build a lot of ADUs in those areas as well. Uh, Lastly, I think the other parts here are going to be, as an architect developer, we've already have pre-approved plans. Not necessarily that they're pre-approved by the time we submit it, but the fact that we know that we've already submitted these to the city or the county, and they've already been approved and used in previous properties. So we're confident that no matter what, with our expertise and track record in ADU development, we will be able to build those units faster than other people as well. Just so you guys know, the average time frame for us is about 8 months for us to get all the permits approved. And I'll explain it a little bit more down the road. It's pretty interesting. The opportunity here, as we kind of mentioned, is the approval has only been for about 2% of its very low to middle class housing mandate due by 2029. And that's really where we're targeting, that gap. Everybody, when they started this, they focused on primarily, let me build what I'm accustomed to. So they built big houses, luxury homes, things that they're like, I can build this and I can flip it for a ton of money. And otherwise, people were building, giant apartments or something along those lines, but those take forever. So what we focused on was this particular opportunity where it says, well, we want to focus on ADU construction. It's not like, it's not like super sexy or anything like that. It's really just basic. We're building granny flats. But at the same time, it's an essential need right now in San Diego. That high demand for affordable living for people is really one of the biggest attractions here for this particular market. So we see working families coming in, we see young professionals. You have Qualcomm here, you've got Apple opening up a campus. So we have some of the biggest tech areas and biotech actually coming in here, and they still can't afford their own homes at the current time. So that all combines to build this really important aspect for something that's essentially a starter home or something for people to come in where they can afford it while living in a really great area. What our competitive edge with everything specifically is focusing how we source the high yield ADU properties. Now, we actually work with several brokers, not necessarily brokers, but I think like they're essentially giant real estate developers already, but they don't really focus on this area. So what we focus on is working with them to get the deals that we know are ADU, I guess prime ADU properties. We focus on essentially finding out what we call the worst house in the best neighborhood. Because at the end of the day, we're doing a lot of renovation, construction, just making sure that we can spruce that up into something very valuable. The deal flow that we get is about 1,000 units or 1,000 different properties every single month. And we choose from that probably just the 1% that actually hit our particular requirements. The other important part is if you've ever been in San Diego and you've ever tried to break into the network here, it's actually really challenging. The San Diego network is very localized. People really don't like to give those opportunities to people outside of the San Diego community. And not necessarily a bad thing. It just means that we all try to help each other here a lot more than before kind of going out. And that's where we have a competitive edge against people. You might have some bigger developers outside of San Diego County that may want to get in, but it'll be much more challenging for them because they don't have that network here. And then ultimately on our side is just going to be we actually focus on having our own formula. So we have our own actual way to assess properties. It uses a specific requirements for us to maximize when we see a property, what is the maximum number of ADU units that we can do? But we also wanted to make it look nice. So we don't try to just build, you know, jail cells essentially just for properties. We actually try to build really good properties in the same way because we think that'll provide higher value. And we actually want to help out the community, not just kind of give them, just whatever housing unit they. Uh, the acquisition process is kind of the one of the most important parts here. The hardest part for us at the current time is we have a lot of deals on the table, and we're actually acquiring some of them for ourselves personally already. But if we had more capital, one of the things that we would definitely do is be able to close on different properties that have also the same value, but aren't the top. So that would enable us to essentially do a lot more with these funds. And of course, our investors would be going in with us on some of these top properties. Anything we do will be sort of a combination of the two. The other part with it is once we deploy the capital, we could do a few things. We could have the investors' money come in to basically help out with some of the capital. We could use our own capital to start. It could be the investors' money that comes in and then actually helps us secure the properties as well. It's any combination of the factors, but the goal is speed. We want those properties to be acquired, in process, getting permitted as soon as possible. And that's where the rapid closings come in. We can do hard money transactions, which is probably a lot of what we do already. We are currently already building about 15 properties at the same time. Now it's been an increase from the last time. We've completed a few as well more since our last, our very first, I guess, presentation with this as well. And the whole part of it is you acquire the property, we immediately start permitting, and you get that permit as soon as possible. The good part about all this is that whatever money is coming in from investors is actually going to be assets titled underneath the LLC, which means you guys are actually tied in with the actual real estate ownership. It's tying in your tokens with physical assets. Um, on this part here as well, it's just going to be creating that especially that value through the ADU development. So kind of mentioned before, we have those pre-approved plans. We have stackable units, basically means we can build multiple units in one specific location, but they're all well designed. And as an architect developer, we can make adjustments to make them look nicer for people as well. And that's kind of the biggest part for us. And one of our biggest advantages is an architect developer. Everything is in-house. We don't have to go hire somebody and pay, an extra 100% on the architecture design. And we don't need to pay an extra 10% to the contractor who's also then going to charge us extra for materials and charge us extra for all the subcontractors. We do that all in-house, which means we're getting the lowest price point. And it's how we build at the 200 to probably 300 max per square foot. It's kind of frustrating if you actually go take a look about how much you get overcharged with construction, but it's because everybody has to make that money as they're actually producing and constructing those properties. Whereas what we're doing is we will only make the income at the end of it when it's been sold or we're able to refinance it. And that's what we're looking at and why we're built at a much lower price point than other people. The nice part is going to be when these permits are done and when the construction is done, we're seeing valuation increases of at least 2x to all the way up to 5x and sometimes a little bit higher. And that's insane. And that's just purely from construction. from these like property valuations. If you go check and you could check some of the, I guess, apartments.com or Zillow or something, just go check what like the rental units cost in San Diego and you'll see it. You might see some at like the 1800 for like a one bedroom, but on average it's 2000 starting. And it goes all the way up to 3 to 3500 depending on location and how nice that piece of property is. Our goal is to always be around a 2000 to 2500 bare minimum price point for any of our ADUs. So we're always looking to make sure that there's strong property valuations here. And this is why it's so interesting, right? Uh, this is just one of our case studies. We just sold this one as well. This is on May 10th, 2024. This is one of our very first ones as well. And the interesting part about it was this, we bought it at 100K. We put the permits on it. Permits cost us about like 50K or 60K. And right after that, we sold the whole thing for 1.49 million. We didn't build anything, not a single piece on it. It was literally just getting the permits. And that's kind of what this market is looking like right now. It's the fact that there's so much value to these ADU constructions means that you basically can, the person who's buying that thinks that they're going to be selling it at way more than what valuation we're doing at a very conservative valuation. So when we did this, our conservative valuation was 3.37. They're once they finish that construction, they're going to be way above that. And I'll pass it on to Mark right now about a little bit of the, I guess, tokenization aspects of it, since he's the expert here. So, Mark, I don't know if you want to chime in here.
Yep, of course. Look, the reason why we wanted to fractionalize this is we wanted to give everyone an opportunity to invest. Normally, James wouldn't really, sorry, James, I'm saying this, give you the time of day with, without something in the 100,000 and above. It's just too hard to manage too many investors. But using smart blocks, we can manage it with as little as $50, really. And again, if you're in the U.S., accredited investors only. I have to emphasize that. Outside the U.S., you're okay. So the reason you want to do that is because once you fractionalize the property, once you buy tokens for this property, I'm sorry, for this fund, you are a legitimate owner of the fund. And when disbursements, which James will get into, are made, you get to participate in your pro rata share of that particular whatever the distribution is. You can also trade the token. If you need money before then, you could trade the tokens out. You can also, in the future, borrow against them. So let's say you love what James and his team are doing. You don't want to sell because you know there's a big payoff at the end. You can also borrow against it for far less than what James is going to pay you out. So those are the advantages to investing in the token side of things. I will add that James will also take, this is a hybrid fund, so you will also take direct investments if you're not comfortable yet with tokenization. And I will distinguish between tokenization and crypto. Crypto is not backed by anything. Tokenization is always backed by an asset. And so those tokens can't be stolen. I won't get into why it can't be hacked or stolen or whatever. But to do the TLDR of it, since James is the owner of the cap table, somebody steals your tokens, he just reissues them back to you. So it's a very safe investment. Now you have liquidity. Now you have the chance to borrow against it. This is something that's never been done before in real estate. Go ahead, James. Oh, I'm going to cover regulations too. Okay. I've probably said this already, but reminder that everything is backed by regulations. We use a Reg D and a Reg S for those that are international. We follow it to a T. There's no fooling around with this. The United States has been so happy with companies in the crypto space, and we're not crypto, but in the tokenization blockchain space that haven't followed these rules. We follow them to the letter of the law. We expect those changes to happen though in the next 6 months, and then we'll readjust and make changes as necessary. It's not going to get more onerous. It's going to get a lot easier from what I can see coming out of the regulators. Go ahead, James.
Absolutely. And that kind of brings us over to the actual fund itself. We're doing a $5 million raise. It is Reg D and Reg S. It's open to U.S. accredited and global investors. We are giving a fixed return. So I think some of the questions we had last time were, how you guys would give that 50% fixed return, which is why this whole thing is being done. reason why we get that 50% return is because when we're constructing these properties, the average valuation increase is already 2x to essentially 5x. And we were returning that at the end of the maturity term. So that's going to be after 24 months. We'll be paying out people their 50% return on whatever they invested with us and the amount of tokens they provided. So that means that it's fixed, right? So unlike other ones that are going to be, I guess, affected by market fluctuations, when you're actually investing with us, you're essentially getting a solid token that's going to be worth 50% of whatever that value is and tied to the real estate here in San Diego, which is very different. We thought this was a unique offering because most people, when they're going to crypto, they're expecting volatility. And that volatility is essentially something that we love when it's going up, but when it goes down, it can cause us some serious impacts into what our investments are. This is a great way for anyone that's whether you're in fiat or if you're doing crypto or you're doing tokens, all of that is actually going to diversify your portfolio by giving you something that is solid. And as Mark kind of mentioned, we do prefer people to invest like quite a larger amount. It's always just nicer to be able to work with a few investors. But the nice part about tokens, which Mark has indicated, is we're able actually to work with a lot of the small investors and give them an opportunity to be part of the pie too. And that's kind of nice. You know, I've done a crowdfund in the past. I've done a few other things as well. But being able to do this has been a really interesting idea for us, and we wanted to see how this will actually work for investors and give them that opportunity as well as the trust that we have. Um, One of the main things here is that the 50%, a lot of people have said is high. We're talking about 25% fixed return for 2 years, essentially. And the one reason why we did it this way is because this is our first fund. So after this, you probably will not see us giving fund sizes like this anymore, where we're giving 50% return. We'd probably be somewhere more in the middle of the term, which will be around like I would say 12 to 15% maybe per year. So you're only looking between 20 to 30%. And so once we get this one done, we actually want to be able to open this up additionally to some of our investors, and we'll see how this rolls into our next fund that will open up down the road. And once that gets done, you know, we'll continue to expand and grow this bigger and bigger as well. Uh, the simple model here is the funds that we receive, they'll go into either acquiring real estate, providing the basis for construction loans along with our money. Then we essentially design and develop the properties, enhancing the value of the acquired assets. And lastly, we sell or refinance those improved ADU properties now in order to repay the investors. The other thing that we can do anywhere along the process as we're getting those permits and as things are happening, those properties are actually already seeing increases in value even before construction is even complete. So there could be opportunities in between, which means we could even sell some of these properties in advance of just a permanent property that maybe we started construction and it would be worth 2x or even 3x that already. This is one of the properties that we just finished as well. There was 225% increase valuation. This is kind of how it looked in advance, and then this is the ADU that we built in the back, just two of them. The nice part here is after it, we basically took it, put in about 300K after the property purchase, and it turned into 1.625 million as well. If we actually repaid the investor on this one as well, when they are asking for that, and we will potentially sell together, we would essentially sell it and we'd be able to split all that money as well. And you can see here, even on a refinance at the lowest, at a 60% LTV ratio, we would still be able to repay the investor their specific investment, which was 460K for this, plus have plenty of room left over for ourselves. So that kind of leads us to where we're currently at. If you guys want to invest, please register at Smart Blocks at XYZ. Talk to Mark. You could talk to us as well. There's KYC verification. We are accepting the primary coins like fiat and then also Bitcoin, Ethereum, or stable coins. If you have any of those, we'd be happy to actually work with you on that as well. We do want to make sure that everything is steady and stable. So it's why we haven't really taken a lot of like any meme coins or something along those lines current time. And then once we actually get that, you'll get the tokens into your wallet and you can just track your investment project progress online anytime. Any questions about the platform, please do talk to Mark and their team. They'll be able to walk through that with you. And I think that's it for today. We'll have some more information on the next one as well.
Well, we got
So,
questions, James. So,
go for it.
you got a few minutes?
Yeah, absolutely.
Okay. All right. The first question I'm going to answer: what technology stack does GTC Ventures use for tokenization, investor management? It's all handled on the smartblocks.xyz platform. I would encourage you guys all to go sign up, so you could check it out. So everything's there, and as far as the technology stack, it's a proprietary stack because we're using part blockchain, part multiple languages, and I'm not technical enough to explain what exactly that stack is. Okay. All right. We got another one from Rafan Khan. What is the core business model of GTC Ventures for achieving 50% returns over 2 years? I think you answered part of that. Maybe cover it again.
Yeah, so the core business model is actually very simple. We are acquiring I would say, the worst house in the best neighborhoods. So basically, high value, I guess, low acquisition cost, high potential value properties for ADU. We then permit it and then build it. Once it's finished construction, we're usually increasing that value for that property by 2 to 5x, and then we either sell or refinance. So if we're looking at a 50% return for investors, we're actually targeting at a bare minimum 100% return. And that's why we're looking at being able to give that 50%. That could go anywhere from 100 to 500% for us. And it's really where we want to make sure we're incentivized with our investors to make sure that we are always picking the best properties to build, construct, and then sell or refinance for our investors. Hopefully that answers that relatively simply.
Okay, good. Next question. What macroeconomic factors does GTC Ventures monitor to ensure project success? Thank God you're not dealing with tariffs, but what are some of the macro factors that you
Uh,
guys look at?
For sure. So obviously, market valuations in the area, is the housing market, is it going up or is it going down? Specifically, whether people are trying to, is it a buyer's market or a seller's market? The prime rate is also something that we always take a look at. The reason why we give the option between sale or refinance to repay our investors is because if the rate's really great, we might just refinance and that'd just be way better for us overall. We'd be able to keep the property and also we'd pay back all of our investors. Uh, if we have the absolute need and we see that, you know what, market rates are going crazy and people want to people want to buy those properties and they're paying a huge premium for it, it's definitely going to be more worth it for us to just sell that property, get the profits, and then just pay it out to everybody as well as get the remaining for ourselves. So that's why those two options exist. We've thought about how to mitigate the risk for investors a lot. We do not want to be in a situation where we have to pay out of pocket to repay investors a 50% return. And it's why we are stopping it at 50% and not going above that number specifically. We're confident that in the situation we're in, we'll be able to repay the investors even if the market has a downturn. And we're looking at property values, which, just so you know, San Diego, property values have not dropped since like 2008. And I think it's just consistently going up.
Yeah,
Even through every
incredible.
single housing crisis, market value just keep going up.
I don't get it. I really don't. It's got to be a supply problem, which is what you guys are fixing.
Yeah.
Okay, another question. How does GTC Ventures evaluate the rental market for the San Diego area?
Yeah. So, as I kind of mentioned, and I'll make this clear too, the rental income does not impact how we repay our investors, just to be clear.
Yeah,
The only thing that matters is just going to be how much can we refinance or sell that property for. Regardless, when we look at the rental market has consistently gone up year on year. Sometimes it stagnates a little bit, but ultimately, right now, what we're looking at is you go check it. The two most recent AU properties we purchased were in Point Loma. Building a single unit there will probably go for about $2,000 a month, I think, on the low end, the very, very bottom. And you're looking at probably closer to like 2,800 per month as a rental unit in that area. And those are types of areas that we're targeting. Those really nice areas, getting like a property there that is under market value, or maybe it is market value and it's still worth it for us to go in and build on it and build 5 units on a single lot of unit, single land unit.
okay. Um, Another question is, what criteria do you use to evaluate these off-market properties to ensure a profit?
So that's a really good question. The first thing is obviously the purchase price. So we're looking at the purchase price of the property and then the square footage of the entire lot of land. And then we check into the zoning and the codes to make sure that we can actually build multiple units in it. There's specific things called like complete communities, which is what we really like to focus on. There's different types of ADU, I would guess, permitting areas. What we really like to focus on are the ones that are simple. They're in great communities, which means they're close to, public transport. They've got great amenities in the area, and building a unit in there will automatically increase the value of that. So to give an idea, and I'll use the Point Loma properties that we just purchased too. We purchased a land. They were a three-bedroom, three-bath house, originally renting for about, I would say, 4,500 per month. And they had like a just an empty backyard. It was decrepit. The whole place was torn down. Nobody was taking care of it. We purchased that one. And at the end of it, we've already finished the main house renovation. We've already started in construction of three of the five units in the back. So by the time we're done, sorry, three of the six units in the back. By the time we're done, it'll be a 7 unit property. Valuation will go from about 1.1 to about, we would think about 3 to 4. And total like construction will be about, an additional 800K. So, and then on that time as well, rental income will go up to from about uh, we've already rented out. Oh, here's the other fun part. We can actually start renting out properties during the ADU construction because if they have a main unit, ADU is always built in addition to the main unit. So we're already seeing some funds coming through there to also just kind of help mitigate some of the expenses. But we're now at like 6,500 for just the main unit. And then each of the additional units will go for about 2,500 to 3,000.
Okay. Well, one last question. I gotta ask this. Uh, what do you feel are the primary risks to investing in tokenized real estate investments? I'll answer that, and then you answer real estate investments. Okay, just traditional what you guys are working on. On the tokenization side, there's not a lot of risks. I'll be honest with you, because when you invest in tokenized property, the token is a mere representation of your ownership. Think of it as a share of stock. If you lose that share of stock, you're already registered. You can get it back, whether it's stolen or you just lost it. It'd be hard to lose it in your wallet, your digital wallet, but you could. Let's say you forgot the keys or something like that. And those in crypto and others that invest in tokenized real estate know what I'm talking about. But James has got a ledger, and that ledger is always updated with the latest owner. So, for example, if you sell that token to somebody, that somebody, their wallet is registered, and that person's identified, and that person is now the new owner, and you're off. It's not like you can go back to James and say, "Hey, I lost my tokens or stole my tokens." He'll say, "No, you sold it to Jim over in Arkansas." I'm making this up. So there's very little risk. In fact, it's only, I feel, more safe because it's on a blockchain. You can track everything that's happened with the token. And so if anything happens, or let's say, God forbid, somebody passes away and their family wants to collect on it or sell it or what have you, all they have to do is look at the blockchain to find it, or they would go to, because your wallet address is registered there, or they would just go to James and say, "Hey, can you help us out here?" And he'd be happy to help. So, from my perspective, the risk is really on the real estate side, which is what James is going to talk about.
Yeah, and I think we're doing real estate. So any risks that are normally associated with real estate are the risks that you can consider to be impacting here. I think this goes back to that macroeconomic question, like what factors are we looking at the market conditions? Um, it's really based on a few things. Is the market going up? Are properties like still being acquired? What's happening with everything? What are the prices going on as well? We also give ourselves like that 24-month period because we look at it as trying to find the prime opportunities for whether we want to purchase or refinance. So the interest rates really are important to us as well. Um, if we want to be able to refinance, we obviously want a lower interest rate. And obviously the sale price, right? So right now, I believe in San Diego, the market is finally getting into like a situation where people are starting to open up their wallets and being able to purchase properties a bit more. So it's a great opportunity at the current time because they're willing to spend right now until at some point people aren't willing to spend anymore. Um, and those are kind of the factors that we're looking at with it. When you think about risk, it's going to be, is there like, is it a seller or a buyer's market? Is there going to be competing, I guess, properties around the area? Is there, even if there's competing properties, it's not necessarily a bad thing. It just means that there's other people coming in, right, to also build and provide units to people. And then, of course, I don't know, earthquakes, if you want to put that down, although San Diego has really never been impacted an earthquake and since I've been out here since 2008. So I've never once experienced a significant earthquake in this area. Um, Mark, you might know better than me. And
Ah,
even
yeah.
um, other than that, honestly, if I would say if this was LA or if this was OC or if this is one of those areas where market conditions really fluctuate a lot and it goes into like aggressively into a buyer or a seller's market and people are like, well, I don't want to buy houses anymore, or I do want to. That's when we start getting into concepts of higher risk. Uh, I know that as an attorney, we usually try not to guarantee, we don't guarantee anything. But I will say that for me, the risk for real estate investments in San Diego, every property I've ever invested into here has gone up in price. I've never once had a loss. And I will say that the first time I invested in a different state, I lost like 10%. And it's just like boggles my mind that I'm like, San Diego just keeps growing. I don't get it.
Yeah.
Um,
Well, I
Hopefully
mean,
that answered.
the weather, it's really an improving city. Since well, I used to live in San Diego and it was, I'd say, a second class city. Now they're getting into first class at this point with all the new restaurants and things that are going on down there. So I think I see it.
Yeah.
All right. So well, we had three more questions come in while you were talking, and I just have we have to get to these. So uh, how does GT? This is from Sunny. Irvinge, I believe. How does GTC Ventures leverage the Cal HFA ADU grant program for their projects?
So that's a really great question, Sunny. Thank you for asking that. We actually don't. We don't need to. Our main thing is really just focusing on purely the those specific properties. A lot of people go focus on that, which is they sort of created these monstrosities of I guess ADU constructions because they're just intending to get as much of the grant money as possible. What we focus on is sustainability and making sure that we're making smart business investments, not just for ourselves, but for our investors as well. So, if the better question for us would probably be how do we utilize complete communities program? We also focus on the coastal line as well. So, there's actually a whole program that if you do the right investments, the Coastal Commission actually cannot interfere with the permitting process. It is automatically passed through and they have no right to say over it. So we focus on the fastest, most efficient way without having to worry about getting funding from other people other than ourselves and our investors. Because we want to make this quick, efficient, and then repay our investors very quickly as well.
Okay. Next question. What are GTC Ventures in-house construction models for ADU development?
Can you give me more, I guess, a
Yeah, I think what he's
rephrase question
asking
about
is
the models?
how do you how do you what are your costs? I'm just thinking in-house construction models would be okay, how do you determine what you put on a property and what are the associated costs with that?
Um, I mean, I'll try to answer this. Hopefully I do without
You could reframe the question if
misinterpreting.
you don't understand it, but
Yeah.
it's something like that.
So I guess for us, what we do is we have multiple stackable plans. So what we've already done prior to even starting our own construction, we planned this out very, very carefully. So we actually planned out about 12, and we're consistently developing new stackable permits for ADU construction that can essentially accommodate multiple different layouts, multiple things that we want to do. They're usually at either the bare minimum of the square footage required for an ADU and going up to some like larger ones. Like this one here is a larger ADU. And what we decide on that is a few factors. One, how many units can we build into that? And if so, we want to maximize the space for those ADU units. So if we can only build two, and this is like a 2,000 square foot space that we can do, then great. We'll build up both to one of the more maximum sizes. But if we know that there's like a possibility of 6 units on a piece of property and there's still only 2,000, well, we might go for five and then say, great, each one's going to be around 400 square foot. So that's kind of how we create our models are based on different sizes, different locations, different shapes as well. And we make sure that they're going to be pre-approved essentially by saying, hey, you guys have already permitted this in the past, or hey, this clearly is essentially the same as the other ones. We're making these minor adjustments, and it makes it easy for the city and the county to essentially approve those plans faster because they've worked with it before. And so everything is about engineering a plan that can go again and again and again without making it look boring. And I think that's kind of a big thing too. There's a lot of places that make these places look boring and they just kind of devalue the neighborhood versus increasing the value of the neighborhood. So hopefully that answers the question. I'm
Yep,
not sure if I did.
I think you did. Um, all right, next one's for me. What happens to an investor's tokens if a property fails to generate expected returns? Okay, so nothing really happens to it. I mean, if the property or the real estate fund didn't perform, then even if you didn't have tokens, the payout would essentially be the same. Now, the good news about tokens, if you don't think that a property developer or a real estate fund is managing your managing the fund or managing the piece of property correctly, you can trade out of that token and get out. So that's the beauty of tokenization. So, but in terms of what happens to the investor's token, the same thing as if you owned a share. Essentially, a token just represents a share of the property. So you get what you get depending on how the property performs. Okay, let's. Whew. All right, this is a good one. Can GTC Ventures convert existing structures like garages into ADUs under current laws?
So that is both a yes and a no. Primarily, you potentially can if it's demised properly, but generally speaking, we're building ADUs in the back of a property or somewhere like on the side. So they're essentially adjacent, and those are creating brand new ADUs. If you essentially really wanted to, you'd have to basically redo the entire plans with the city for that, and probably demise and separate it. But ADUs are meant to be a adjacent piece to a existing lot of land. Sorry, existing property on the land. Um, so I mean, I guess you could if you wanted to, but that'd be more just essentially an add-on to a existing house unit versus an actual.
Okay. Next question. How does GTC Ventures define fixed 50% returns in the context of this real estate investment?
I mean, very straightforward. We try to make, when we work with our investors, we try to make things as transparent, simple, and clear as possible. Let's just say you invest $100, your token is worth 150. So when we repay you back, we pay you back $150. You'll get you back your initial investment plus 50%.
Okay. Next question's more for me from another guy with my same name, Mark. What are the liquidity risks of investing in GTC Ventures tokenized real estate fund? Liquidity is, I'll be honest with you, not great right now, but as new regulations passed and the industry, which is growing exponentially every single year, I'd say in 2 to 3 years, it'll be a very liquid market. Probably more liquid than stock market, only because it's international. The stock market here, at least in the U.S. and in most places, is generally limited to people in that particular country. Not all the time. London's got a good exchange, but how many of you in the U.S. have invested in the London Stock Exchange? Not many. It's not as easy as you think. But with tokenization, it's like 4 clicks, and you could be anywhere in the world. So there is liquidity risk, meaning it might be tougher to sell your token now, but every single day the market becomes more and more liquid, especially when regulations are a lot clearer in the U.S. in about 6 months' time. Okay. Last question, and we got to wrap it up. James has been more than fruitful with his time. How do you handle investor inquiries or concerns?
So I mean, there's two ways. One of them will be obviously you can contact us through the platform. And if you have any questions about that, we can basically answer and talk to those things as well. As Mark kind of mentioned, we are looking for people to do like larger investments. It just makes it easier, I think, for everybody. But if it's a case, you can just contact us at our emails. And if you're there to do a call, just let us know in advance so that we have time to essentially like schedule for that specific call. As far as concerns or inquiries, I would say the same as any other platform. This is actually probably my third like fundraise that I've done. And so in this situation, all we would do is essentially reply. If it's a simple question that we can answer in email, great. We'll send in an email. If it's something that you're saying, well, I need to have like a discussion with you and you're really serious about the investment, we'd be happy to have that conversation with you. Um, the only thing that we want to make sure on our side is we do not waste your time. And, we also respect the request that our investors don't waste our time. We're here to do business together and do something great, not just like, answer questions for no reason. So treat us with respect and we'll treat you with even more.
Excellent. Good. Last question, then we'll wrap it up. This is for me. Where are the tokens listed? Smartblocks.xyz. Go there. You'll find his real estate fund once you log in, and you'll go through a KYC process, and that's it. Pretty much you can invest at that point. So we're gonna wrap things up, James. Any last thoughts before we head out here?
No, just letting you guys know that this fund, we've been working on it for quite a while, but we really just launched any of our marketing this like last 2 weeks. So we're very, very like relatively new with this specific platform, and we're really excited to be working with you guys. Any questions? We actually do want you guys to answer, or sorry, ask more so we can learn a bit more and understand how everything works. Never feel afraid to just let us know because we will only learn by getting more feedback from, you guys as investors. So thank you.
Excellent. Thank you. Bye, guys.